Hello, this is Jeff Bish, president of MarketGauge.com, and welcome to another trades and tutorials video from the little big view section of MarketGauge.com. So if you're seeing this on YouTube, please make sure to subscribe to our channel and also go over to MarketGauge.com where you'll find more than just the videos available to you for free to be able to get a good sense of what's going on in the markets, from ETFs that are being scanned for to market internals and charts you won't find anywhere else. If you're already on MarketGauge.com, then well, you're in the right place. Make sure you see the rest of Little Big View, and let's get started. So as always with these trades and tutorials videos, what I would like to do is give you either a quick tip, quick trade idea, or perhaps, and in this case, a little bit of somewhat unique analysis. For some of you, this probably is not what you want to delve into. For others of you out there, you might find this interesting. So we're looking at the SPYs right now, S&P 500 ETF, and the question on most people's mind is, or at least should be, is the market going to break out from this resistance level here, which is the year-to-date high? And then more importantly, if it does break out from that level, does it take out the highs of 2014 and keep going? Well, there's a lot of different arguments we can make for this. And in this particular video, I'm going to focus on one simple thing, and that is if the market starts to move higher like this, there's some place you might want to look, keep an eye on to confirm whether or not this move higher will continue. Now, I know this relationship for some of you may seem a little obscure, and that's why I decided to bring up the chart and just literally let's look at the correlation. And the chart I'm talking about is the dollar yen chart. So the idea behind this is that if the yen, which is the dollar yen, which I have here in red, if this is rising, then the markets have a higher appetite for risk and global growth, and that should be positive for stocks. So I've got the INX, the S&P 500 in blue, and dollar yen in red. Now, I don't really want to overanalyze this. I hear all the time yen stocks highly correlated. Watch them both to figure out which way the market goes. Uh, on an intraday basis, that may be true. On a super long-term basis, I'm not so sure it is true. On an intermediate term basis, it looks like it's got some merit. And here's a way that I think it does have some merit as it pertains to right now. So these relationships come and go, and you can't look at them as being set in stone. So to kind of fast forward to the end of my thought process, so where I want to take you. My thought process right now is, again, the red is the yen, the blue is stocks. So if we just look at the situations where the yen is strong, so the red is moving higher, this has tended to be bullish, or at least indicated a bullish environment for stocks. I don't even want to go so far as yen is going up, therefore stocks have to go up, but rather yen going up is an indication that the right environment for stocks to rally exists. So what I've done is I've taken these horizontal lines and I just put them at certain places to make the analysis easier. So in this case, I put it at the bottom of this yen move. And you can see as the yen was going higher, the stocks were also going higher. Now I don't want to go so far as to say as soon as yen turns, the stocks are going to turn. Although recently, it certainly has worked out that way. You can see they've traded pretty much in lockstep, maybe with the exception of this going flat here and the stocks pulling back a little bit. But this is such a small move relative to the big picture that we're looking at. So when I come to the conclusion of all this, the conclusion will simply be that if the yen really breaks out, and if you look at the yen chart, so here's the yen chart, kind of done with a crayon. This looks like a pretty good looking chart in terms of something that could really break out. If that happens, then that's going to be indicative of an environment where stocks could also really break out. Now, if the yen consolidates and breaks down and stocks move higher, does that mean that stocks can't move higher? Absolutely not. Stocks could still move higher. So this is not an indicator or a situation where whatever the yen does is what the stocks are going to do. Although recently that has been more or less the case, so you might want to keep a closer eye on it. The thing I'll watch out for is a big yen breakout. Then I'll get more bullish on the stocks. If the stocks break out to the upside and the yen doesn't really follow, I'm not sure I would let that bother me. So that's the conclusion, and you could end it there if you'd like to keep the video shorter for you. But if you want to see a little bit more, let's take a look at how this really has played out historically. So as I said before, I went ahead and put some horizontal or some vertical lines just at some key points just to see the relationship that I'm talking about. So let's just scroll back here. I went back to about 2012. And again, here's my thought process. If the yen is in a strong up mode, that's where I want to pay attention to stocks. If I do that in this time frame of stocks, it was the right time to be bullish. Again, looking back here, you've got what is a choppy period of the yen dollar, and stocks still went up. So in no way would I look at just the yen's direction and say that's the same direction as stocks. I want to see the yen moving up, then it's a bullish condition for stocks. Here's the situation again. So yen really starts to move higher. Stocks move lower initially, but you can see you've got some kind of a consolidation here in the yen. And when that consolidation breaks out to the upside, yen's on a tear, stocks are on a tear, and they peak out at about the same time. So far, 2012 seems to have held the relationship pretty well. If we move fast forward to look at all of 2013 and 14, we can see yen moving higher, stocks moving higher. They peak out at about the same time. Yen moves higher, and the stocks don't necessarily move higher. In fact, they continue lower. But in that environment of yen moving higher, stocks do kind of turn around. This one's a little bit weak, but it picks up again here where yen's moving higher, stocks moving higher, they peak out at about the same time. Yen, which has had a huge move by this point, bases out for a long time. That doesn't prevent stocks from moving higher. And here's an area where the relationship, I think, starts to break down a little. And you've got yen moving higher. And from this point to the peak in the yen, really stocks go flat. And maybe that was a little bit of a warning sign where you get a nice strong move in the yen and no real move in the stocks. So as soon as stocks really start to roll over and yen rolls over, again, yen just telling you maybe it's not the greatest time. And in fact, stocks take a big plunge, or at least a big plunge for 2014. But when the yen then turns around and heads back up on a tear, there goes stocks again, and the relationship's back in gear. So that brings us to the current situation where we've been lockstep pretty much. And that's why I'll conclude once again that if the yen breaks out, you definitely want to keep your eye on stocks for a move higher. Doesn't say they have to be, but yen will be telling you it's the right environment for it. So hope that helps, and I'll see you in the next video.